So we got a great lineup for you today. Here we're going to talk about business and coaching, but I wanted to have Diane talk a little bit about the market. I think it's very confusing. Not only the mortgage process, real estate investing process, but the market right now. We see all this. It's kind of like a house of cards. There's so much printing, quantitative easing, printing of money. I heard on one of the podcasts I follow, like the last 6 weeks of buying the mortgage-backed securities and bonds, that the bonds rather. It's the most that we've had in the history of the United States over, I think it was a 5 or 10 year period that we've compressed into 6 weeks. So you start thinking about, how is this going to affect our currency long term? You see currencies, cryptocurrencies popping up, blooming, and really succeeding in a lot of ways. What's your take on the whole thing, Diane?
Well, Fed Chair Jerome Powell spoke yesterday, as we were talking about, and the biggest thing is the jobs market. He said the job market is cold as ice, and they're willing to sacrifice increasing the debt to help the economy. He made it clear that this is the time. So a lot of times what happens is when there's inflation, which of course there's going to be because of the pandemic. So we're naturally going to have inflation, right? There's manufacturing shortages. There is shortage of inventory houses. There's just a lot of shortage of items out there. So what happens is the prices increase. I mean, let's take building, for instance. That has increased, it's like tripled in the cost of a 2x4. So,
right.
Typically what happens in the normal world is that the Fed then starts raising rates, but they are not going to do that, and they're not going to stop purchasing MBS in the Treasury, so they're going to continue to do that. And the reason they do that is obvious. It's because of the pandemic and because they know that it's a different world than we have, but it does affect our economy. It does affect our dollar. But let's face it, we've never been in this type of a situation. So the uncertainty of the market is not they don't really like uncertainties. So that's how the Feds have actually kind of kept things a little bit stable. Now, the stock market's doing awesome, of course. At least it has the last few days. But some days it goes down, but most days it seems to go up recently. I'm not sure how that's happening, but it is.
Well, isn't that a lot of buybacks? So they're taking on corporate debt, they're buying back their own stock.
Yep,
isn't there a lot of shell games going on in the stock market right now?
Yeah. I don't think the stock market is supposed to work like it is right now. I mean, we saw what happens with GameStop and Reddit and all that type of thing. So it's a different world we have never experienced, but it does affect it affects us. I mean, it's going to affect our dollar. But the rest of the world is probably doing the same thing we are. I think time will tell. But I don't think we have a lot of choices at this time. We do have a lot of people that are hurting. A third of them, I heard that a third of the workforce is still out of work. So those people do need help. So I don't think we're going to see. I don't think we're going to see things change until we actually get the vaccines and get everybody. Where we have some herd immunity or something like that. I think the Feds are going to continue to keep the interest rates at zero and continue to buy the MBS and the Treasuries. That's what they're going to do.
Yeah, and it's a real big challenge as well. By the way, if you just joined us, I'm Brandon Rhymes here, the host of the Consumer Quarterback Show. Diane VANCE, Fairway Independent Mortgage. We're talking about just the overall stock market, the mortgage market, the bond market, what's happening in this space. And I think right now, too, if you look at where the future is. You look at all the big tech companies, all of the different phone companies, the batteries, the need for Tesla, the batteries. So if you look at the influence that China's had on our country over the last 20, 30, 40 years and where we're at right now, it's almost to a point where we need them to a point. I believe they own something like 60%, 65% of the lithium and the battery production. So it's almost some of our lifelong politicians, to put it nicely, have really put us into such a bad position, a precarious position with the Chinese, and especially we know it's the Chinese Communist Party now running a lot of things. That's affecting, everybody has a cell phone now, so that's crazy to think about.
Yes, and it goes back several administrations ago.
Exactly.
It started way back, and when they decided to open up the to help China grow, and they certainly did that. But it's been several administrations ago, so it's kind of Not that it's, I'm trying to think of where do they get all the lithium from? I'm trying to think of where the lithium mines are, but you're absolutely right.
I think some's in Africa. I mean,
yeah.
That's the good thing is they don't control all of the raw material, but they're actually controlling the labor and the putting it together. I was watching one of my favorites, PBD podcast. He does a great job, but yeah, it was an interesting conversation to be had there. Let's go ahead and take a break. We'll come back. We'll pick it up more with Diane Vance, Fairway Independent Mortgage, Thomas King in the house as well, Florida Firearms Academy. Support your local economy, your local businesses here as well. And we've got Sam, the business coach, in studio as well. Stay with us right here on the Consumer Quarterback Show. Make sure you check out consumerqb.com.
Thanks for listening to my daddy's show. For more information, go to consumerqb.com.
To get in touch with Brandon, call 813-670-7372. Online at consumerqb.com.